Welcome, traders, to another Tick Mill trading update with me, Patrick Manley. Want to update the S&P 500 view using the emini futures contract and put together a trade plan for the session ahead. So, in a pretty eventful week, we are wrapping things up today with on the macro side of the book. PCE data out of the US. This is obviously the Fed's preferred inflation gauge, but I would suggest at this stage, unless we get a print well with outside consensus, then we are anticipating that the risk on narrative will remain in place, and markets will continue to price additional easing by the Fed. So core PCE price index expected at 2.7. US consumer spending month over month, keep an eye on that, 0.3. Last time out was a 0.5. So expecting to see a bit of trimming in terms of spending, principally related to the job growth narrative that we're starting to see emerge in the US. We also get University of Michigan sentiment final, looking for 69.4. And we will hear from, once again, Fed's Bowman at the end of the day. She is the lone dissenter in terms of rate cuts. So moving to the technical side of things, we are into the weekly VWAP band resistance area. Talked about in prior updates, still shy of this 58.92, which is the 127 extension of our last significant corrective move. And on the daily time frame, we are starting to wedge here. We traded up into the implied volatility expected range resistance yesterday and got a pullback, and I shorted into that and also took profits on long positions. So I'll update my trading positions now. Let me just post that onto here. So this is where I'm at in terms of my swing positions. Still holding the VIX, still holding Bitcoin, dollar index, just about. Been a little bit whippy with the news out of Japan overnight that Ishida is the new prime minister and essentially considered to be a continuity candidate. So we're expecting a bit more hawkishness than the dovish alternative, the security minister, Takashita, I think her name was, but she lost out. So we're seeing a bit of volatility in terms of the dollar. Holding the short from 23, I'm going to put a risk-free stop in place on that. I put on a bit of China exposure, obviously, with everything that's going on. That seems like a decent shot. I'm going to update the China 50 view heading into next week and identify some levels of interest there. I think it's going to be an interesting period. Obviously, China are out next week on public holiday. And if we don't see, if we don't start seeing the emergence of some consumer activity based on all this stimulus, I think we could see some second guessing in terms of this full-blown China long trade. So that's going to be interesting to keep an eye on next week. And like I say, I'll update that view accordingly. I bought into the bull bear zone this morning, the rejection of the bull bear zone. So I talked about the 57.90, 57.80 being key as into the European session, and we held there. So I've got a long running. I'm using 57.18, which is the bottom of the bull bear zone, the daily bull bear zone, as my stop on that for now. In terms of where we are heading into today, looking at the hourly chart here, whilst we hold yesterday's 58.11, we have a downside equality objective, 57.61. Now, we also have daily projected range resistance, 57.63. We also have the value area low for the hourly profile, looking back over this week, coming in there as well. So if we do get a move down to that area, I will look for a tactical long to retrace back up into test the 57.90 from below. If that trade plays, if that scenario plays out, I would be expecting sellers to step in back into 57.90 to the 5800 for another leg down, and a look at a break off that 57.50 pivotal to the downside, opening a move down into 57.30s. The alternative scenario is we hold the daily bull bear zone and extend back up, retest yesterday's highs. I think we can still see some choppiness into that 58.30, 58.40, but we'd be anticipating then to hold the overnight value area high, and yesterday's volume point of control comes in 58.04. And then we could see that extension up into that 58.70, 58.80 area that I talked about yesterday, where once again, if we're trading there into the back end of today's session, there is certainly an opportunity to play a tactical short position. So that's pretty much where I'm up to heading into the close here. Personally, I'm going to be off the desk later this afternoon, so won't be active in terms of updates on the voice notes during the cash session. But the levels are pretty clear, as you can see, and each one of these, like I say, every day, use those intraday divergences as an opportunity to improve risk reward scenarios. As is the case, pretty much on a weekly basis, the levels tend to give decent trading opportunities. So I wish you all a happy Friday and a restful weekend. And as always, traders, plan the trade, trade the plan. Most importantly, manage your risk. Until next time, thanks very much.